amazing panel of some of the top investors in the world. And what we wanted to do today is really just informally, we're not going to use PowerPoints. We just wanted to share information and give everybody a great overview of what's happening in today's market. I think as many of you learned in the distress panel this morning, a lot of people are having trouble getting loans on projects today. A lot of people think it's very hard to do projects, but major companies are still getting deals done. They're just doing them a little bit different. What I want to start with is Tim Bellman of ING. Tim, if you can give us a brief overview of your responsibilities of ING and what you see happening in today's market. And then we'll just move down the panel.
All right, sure. Thank you, Brian. I'm Tim Bellman. I'm the Global Head of Research and Strategy for ING Real Estate. ING Real Estate is a wholly owned subsidiary of ING Group, which has its origins in the Netherlands. And we have 107 billion euros of real estate under management worldwide, which is broadly sort of grouped into three divisions. We have a real estate development company globally, but that mainly focuses on the traditional hunting grounds for ING of Europe. We have a real estate finance business, which is a lender, and then we have a real estate investment management practice, which invests third-party capital and also some ING balance sheet money in a series of more than 70 commingled funds and separate account vehicles across the world. My role as the head of research is a 60-strong, slightly more than that, research team, although in these difficult times you keep a little bit low profile on your head count. We have a 60-strong research team whose role right across the world is to monitor what's happening in local markets, trying to predict what's going to happen next as part of the underwriting process for our acquisitions, dispositions, and asset management functions, and then has a strategic level, a thinner number of people who are advising the funds on what to do next and so on. My specific role as the global head of research is to work with the global investors that the firm manages money on behalf of, and whilst this is a growing area, real estate remains fundamentally a local business, and almost all the capital that even an organization like ING manages is domestic capital into the local real estate market. But we have a growing band of international investors who are looking at truly global mandates, and we have our sort of global funds under preparation and in practice as well. I don't know if you wanted me to talk about at this point sort of how we see the markets, or if you want me to just sort of pause at this point. Well, it's difficult times, but you've been talking about all that, I'm sure, all day. And that will be no secret to anybody. For the past 3 years, if you like, for the more core, low-risk investor, we have advised that if you look at broad geographies and sector types, that the opportunities lay best, and we were strongly overweight continental Europe and continental Europe in particular, and we were sort of quite sharply focused on the office market as a cyclical opportunity and investing into that upcycle. We were into the core and plus and value-added space because opportunistic investment was very difficult and core investments were very much overpriced. And that is, of course, all changing now. And to the extent that we would advise investors to be committing money at this point in time, and I think there's a good argument worldwide why you would sit on your hands for a little bit across some investment themes. To the extent we're advising people to invest at the moment, we are we would be modifying that sort of theme stance and away from value-added and into more opportunistic investing, particularly transitioning from the equity space into the debt piece, where I think we see better returns of taking debt positions at the moment. But we would also be sort of taking a long, hard look at our geographical recommendations. And whilst I think in what's quite uncertain outlooks across real estate markets worldwide, we're happy with our overweight position in the nice, stable, secure, low volatility continental European positions. Over time, I think we'd be looking to transition that overweight position perhaps into more of a position that was taking a stronger view on Asia. We're not overweight at the moment, but we would be at least market weight there. We'd be looking to change that because I think Asia is holding up a lot better, at least in certain parts of the geography. But over the course of time, I think we would be keeping a wary eye on 1-2 years' time, because it takes a lot of time to redeploy large amounts of money. 1 or 2 years' time where the returns are likely to be bouncing back most strongly. So whilst we'd be moving into a more defensive phase at the moment with industrial and retail investments probably in most of the geographies, over time I think we'd start to look at where the opportunities bouncing back will come. And I imagine that it won't be that far off before, given it takes 6-9 months to turn the ship around and move it looking in a different direction, we'd be keeping a weather eye out on whether or not the economic prospects in North America were looking at a bounce back that started to be opportunistic timing to move to a more overweight position here. But that's looking a lot further out than the immediate future. But I guess that would be my global roundup.
Thank you so much, Tim. Philip?
Yes, thank you.